What is going on, penny boys and gals? What's going on, stock traders? And welcome to the stream. Welcome to week 5 of our trading psychology series. These are live classes. Typically every Wednesday, 5 p.m. Eastern is when we do these. Today we are obviously doing it at a different time here. I know it's Monday. We were away last week, but we are here, and we're actually going to be also doing it this Wednesday again in a couple days here at 5 p.m. Eastern, our next trading psychology group session. And both tonight and on Wednesday, following this trading psychology session, we're going to be doing our trading trivia, where we do a whole bunch of giveaways and merch giveaways, not just our giveaways of our memberships, but also giveaway of merch, giveaways of PB credits, and a whole bunch of other fun stuff. So tonight it's going to be a shorter class because I know we do have an hour time limit. We do have our free live stream coming up here at 7:30 p.m. Eastern. We do that every Monday with Nikki and Big Daddy NHM. They do a free live stream going over our 50 class trading 101 series and our 22 class trading 201 series. They kind of just pick one class from those groups and kind of just go over it in detail with everybody. So let's get right into it so we can get on to our trading trivia. I want to make sure we have enough time for everything tonight. I know Monday's a packed day here in Penny Boys in the live stream section. I know Duco was saying there's a whole bunch of classes. So today we'll be talking about trading mindsets. We're going to be talking about developing a disciplined trading mindset and why it's one of the key factors that people just don't talk enough about when it comes to ways to just find success in the markets, just in trading in general. In today's class, we'll explore what a trading mindset is, why it's important, different types of trading mindsets, examples of what could be good or bad mindsets. And I know there's all kind of individualized. What a good mindset for somebody else might be a bad one for somebody else. And we'll be talking about that as well as strategies for cultivating patience, persistence, and setting realistic goals and expectations. Emphasis on realistic when it comes to the goals. I know a lot of people, people teach or just talk about, setting goals is so important, but the part they don't really talk about a lot of times is setting realistic goals is important. Just setting a goal in itself is great, but if you set a goal that is out of your reach, it might end up making you feel different emotions when you don't reach said goal. And having that goal could actually have a negative effect on your trading, or you might make bad trades or bad decisions trying to risk too much to get a big reward so you can make said goal. So it is really important to set realistic goals and ones that just work for you personally. So what's going on, Charlie? We got Monday. So what exactly is a trading mindset? Well, a trading mindset refers to the attitudes, beliefs, and mental frameworks that influence a trader's behavior and decision-making process in the markets. In an ideal world of buying, holding, and selling, we would only be influenced by technical and fundamental analysis and due diligence. But that's obviously, as we all know, not the case, because all of us are humans and we have emotions. That's just not going to change. Our mental framework, or trading psychology, is a huge factor when it comes to the decisions behind our buying, holding, and selling. So it's not just the charts, it's not just the fundamentals, but there is the psychology behind it. Our emotions is a huge factor behind when we do when we have a buy or a sell or hold, or decide to do whatever we want to do with these stocks. And so it's important to keep that in mind and to really cultivate those skills of your trading psychology skills just as much as you would your charting and fundamental analysis skills. So if you're going to learn to practice how to read balance sheets and ratios and other fundamental analysis aspects that we teach in our Trading 301 course, or how to read a chart, which we also teach, well, then it makes sense to also learn about and put into practice trading psychology, seeing as it's just as big of a factor as the other two when it comes to buying, selling, holding, and overall success in the markets. So a trading mindset takes into account factors such as discipline, emotional control, resilience, adaptability, and focus. A strong trading mindset is characterized by clarity, confidence, consistency, and a commitment to continuous improvement. So once again, that's clarity, confidence, consistency. A lot of those are things that we struggle with when we are feeling emotional, especially the clarity part, the confidence part, when that doubt kicks in, whether it's from, a trade that you lost the other day, or some kind of comment you saw on the Webull comments, or whatever it may be. Doubt is what kills that confidence. And so, that's a big emotion that we have to work on if that's something we struggle with. And of course, consistency, when it comes to our plans and our strategies. That's the only way to see if a plan or a strategy works, is to actually use it and of course take notes with us so we can see what does and doesn't work in that strategy. So why is our trading mindset important? Well, a trader's mindset can make or break our success in the markets. A disciplined and resilient mindset enables us to navigate the inevitable, because it's going to happen, ups and downs of trading with grace and composure. You're not always going to be perfect in the market, just like in anything in life. If you're at your job and you might be one of the best at your job, you're going to have a bad day every once in a while. It's going to happen. I try to limit reading Reddit or comments places for that reason, Let Us Smash. And that's actually a very good, we talk about that in our trading plan classes about, maybe when I look at Webull comments, I get FOMO, or I start to sell too early, or whatever may happen. Well, now I know not to look at Webull comments. Maybe wait until after the market's closed or whatever it may be. And we put that into our plan. And it's not just our charting plan or our fundamental analysis plan. That's our trading psychology plan. So that's a really good observation there, Let Us Smash, and a good thing to have in your trading plan arsenal. So developing a strong trading mindset is essential for maintaining consistency, managing risks effectively, and of course, achieving long-term success in trading. So for those of you who haven't already, we have, and I think most of you probably have, we have that Get a Coach channel. In there is a form that you can fill out, and in that form, there's a THARP traders test. It's like a psychology test, and you answer like 20 questions. It's a yes, no, or just like it's like a multiple choice, very easy and quick. Probably takes around like 2 to 3 minutes. After you take that, it'll give you a trader type that you are. And in our Get a Coach, in our coaching program, we use that trader type as well as your schedule, what you're interested in learning, and all that kind of stuff to find a coach for you. But we're going to be talking about those different trader types today. So if you haven't already taken that THARP traders test, from that form, just try to remember what it was that you got, because we will be talking about these in today's class. So let's go over some examples of positive or constructive mindsets when it comes to trading. So let's start with some positive and constructive ones. Yeah. And then we'll get to some negative ones as well, or even some neutral ones. So the first one is disciplined optimism. So traders with this mindset maintain a positive outlook on the markets while adhering strictly to their trading plan and risk management rules. They approach trading with confidence and optimism, but remain disciplined and focus on their objectives. For those who took that THARP traders test in our Get a Coach form, if you got strategic, systematic, or perfectionist trader, then your attention to detail and desire for following a strategy might make having disciplined optimism a big strength of yours. So if that's might be you, this would be something to kind of strive to. It may be a goal to have in your trading, is to have disciplined optimism. Adventurous traders as well might also thrive from having disciplined optimism, as long as they keep focus on that optimism being disciplined. Because with adventurous traders, a lot of it is about fun. And so, it is really important for the adventurous traders, a little bit more so than the systematic, strategic, and perfectionist ones, to really keep an eye, or just keep tabs of their discipline part of the disciplined optimism. So basically, overall, traders who prioritize discipline, stick to their trading plan and risk management rules, are most likely to exhibit traits of disciplined optimism. And not everyone's going to have it, and that's fine. Some of these traits we're talking about, you might have, some of you might not have, and some work for certain people, and some work for others, just like with video game traits. Another one is adaptive resilience. These traders demonstrate resilience in the face of adversity and adaptability to changing market conditions. They view challenges as opportunities for growth and learning, adjusting their strategies as needed to overcome obstacles and achieve their goals. And let me know, anyone who's listening, if you feel like any of these kind of relate to you. And we're going to be getting some negative ones as well. So same deal with those as well. From the THARP traders test, we have strategic, adventurous, and opportunistic traders who thrive when using this adaptive resilience mindset. Strategic traders are known for their ability to adapt to changing market conditions and adjust their strategies accordingly, and they view challenges as opportunities for growth and learning. So using their analytical skills, whether it's technical or fundamental analysis, and market insights to overcome obstacles is one of their strengths. Successful strategic traders remain focused on their long-term goals, which is a huge positive when it comes to this adaptive resilience. And opportunistic traders thrive in volatile and uncertain market conditions. So they capitalize, once again, as the name says they capitalize on those opportunities. So they demonstrate resilience by being able to quickly adapt to changing markets, which is super important. There's also adventurous traders who kind of thrive with this. I don't know if anyone got that one. I know Kev Cave or the dude was someone who got that a long time ago, back in 2020 when we first brought out this test in Penny Boys, and he got it again 2 or 3 years later when he filled out the Get a Coach form. So some people do kind of stick with with their trader type as the years go on, and they're characterized by their willingness to explore new markets, strategies, and trading approaches. So they embrace uncertainty with volatility, uncertainty and volatility. They embrace it, viewing challenges as opportunities for adventure and discovery. So for those of you who kind of see these challenges, see maybe pitfalls or downfall, like red markets or just red times in general as not a bad thing, but as an opportunity, a way for you to just adapt and learn and be better, as the future progresses. Because some people really struggle with that. People take the losses, a lot harder than others. This is how people are. We're all wired differently. So if you are wired in the way that you can kind of roll with the punches, then this might be a type of mindset, adaptive resilience, to strive to, being able to view challenges as opportunity for growth. Is Get a Coach free? I got Independence to CAC. So the Get a Coach, we do have 2 free coaches. We have our in the walkthroughs channel. We have Pookie's Revenge. He's our dividends coach. He goes over the Rags to Riches series, which is long-term investing and dividend investing. We also have Austin. He does a Monday coaching stream as well. That's also free. Excuse me. And that is going over options, like long-term options trades. Kramer Jr. got Adventurous. Okay. So we talked about Adventurous twice here. So I don't know, Kramer Jr., if you feel like you might either struggle or, have, a good mindset when it comes to adaptive resilience and discipline optimism. Those are both things that adventurous traders could, thrive on, or depending, on how disciplined it is, also could struggle with. So adventurous and independent. And then we do have 4 premium coaches. The one we have, Ethan is our day trading coach. We have Swinging Bull as our passive protective options strategy coach. Then we have Lee, who is our swing trading coach, kind of based off of channel trading. And then, of course, Jay is our technical analysis swing trading coach. And those are all in the premium area. Another mindset is patient persistence. So traders with this mindset understand that success in trading, and this is really important to just keep in mind, success in trading takes time. And these kind of traders are willing to wait for the right opportunities to arise. So maybe not day traders. They remain committed to their long-term objectives, even during periods of slow progress or setbacks. So if you are a strategic trader, an independent trader, perfectionist trader from that THARP test, then you may excel with the patience persistence mindset. Might be something worth looking into. Duco, oh no. I am we're going to be doing some crypto stuff over in Titan when it comes to coaching, but nothing and Web3 stuff related. But over here, that is not the case. I definitely am not a coach here in the stock trading portion. But we have these weekly psychology group sessions, so I guess in theory it's a free coaching session. Once again, strategic traders possess the patience to wait for favorable market conditions to align with their strategic objectives. So those of you who are strategic traders, you might excel with a patient persistence mindset, or just trying to strive towards being patient and persistent when it comes to your trading. Independent traders, and to CAC, that's what you said you got, demonstrate persistence in sticking to their trading plans and their individual independent trading plans and strategies, regardless of short-term setbacks or fluctuations in market conditions. And if CAC, you've been with us for a while, lifetime member, I know you've definitely been able to handle the ups and the downs of not just the stock market, but I know you're also in the crypto market, NFT market as well. So, maybe your independent trader type, allows you to have that, patient persistence mindset that was, is helping you in the long term and, keeping you here. Because that's the trick, is just honestly to get 3 years under your belt, whether you lost $100,000, you made $100,000, you made $0 or even $10, whatever. It's not about how much you made. It's just about making it, for past those first 3 years, because that's just the learning. It's like, college, you're in college for 4 years, you're in high school for 4 years, in the market, you got to put some time in before you can really, really, really be confident in there. Obviously, here in Penny Boys, we try to help you not fast forward because you don't want anyone to ever be in over their head or try to rush anything. But we teach, at least with with the coaches corner and the coaches program, they help teach all different strategies to help y'all avoid the pitfalls and downfalls that they've done over the past 10, 15 years in their trading careers. That I know a lot of us have gone through as well. So next one that we're talking about is some neutral mindsets. We're going over these ones kind of quickly. This first one we're talking about is, that's not Takak right in there, is balance pragmatism. So traders who have this kind of mindset maintain a balance and pragmatic approach to trading, avoiding extremes of either optimism or pessimism. So, during those big bull runs, where everyone's shouting, Dogecoin's going at $10, they kind of see it as, they look at it more realistically. They don't kind of jump on the, the herd mentality we talked about in our last courses, in our last classes for trading psychology. And same deal, when everyone's saying, oh, sell everything, the market's crashing, unless it's, like the 2008 financial crisis, traders who have a, this type of mindset, this type of trading mindset, might not be as inclined to just jump on the herd mentality of just selling everything, because of a, bad news or bad earnings or whatever it may be. Because a lot of people do like to jump on the bandwagons where there is negative news or positive news. It's fun to be involved with the crowd and be on the crowd side. And some people actually like being on the opposite. But it's important to kind of assess which person you are. Whether you have that balance, that balance mindset where you're not either too one way or the other, or if you're the kind of person who loves to be on the crowd, be with the herd, and you love when everyone's talking about, a certain coin that you're in, or when everyone's talking about a stock that you bought, and you love to comment with everyone else, and you love being part of that. And then some people like the opposite. They love being able to say, "Hey, I told you so." When everyone else is saying one thing, they love to say the other, and then be right. And some people, if that's their mentality, if they don't have that balanced mindset, they might, kind of do that too much. They might use their emotions. The emotions being, I want to be right when everyone else is wrong, or the emotion being, I want to go with the herd. They let that emotion dictate their trade as opposed to technical or fundamental analysis. And so it's important to kind of, assess who you are when it comes to that. Are you balanced? Do you like to be with the herd? Is it fun for you? Or do you like to be, the pessimist, or do you like to be, right and prove everyone else wrong, when the herd is against you? And then kind of realize maybe your next couple trades, see, oh, everyone's talking about the stock going up, and I want to get into it on the downside. Maybe there's a reason behind that. Maybe it's not just fundamental or technical analysis. Maybe it's just my emotions. Maybe I should do another round of due diligence to see if it's something I really want to do. And so people just you just kind of need to learn what works, what your ticks are, I guess, basically, when it comes to you as a trader. And that's why I said before, that 3-year period is so important. It's not about, once again, how much you make or how much you lose. It's just about putting time in, especially those first 3 years. So I don't stress that enough. And you don't have to have, thousands of dollars in the market those first 3 years. You could be paper trading for 3 years. You can paper trade for 6 months to a year, and then, just trade with $100 account until you feel comfortable. There's nothing wrong with that, because you can still develop the right mindsets, with those smaller accounts. For those of you who aren't following, I'm actually doing a $250 account challenge, kind of focus on trading mindsets. There's also a $50 YOLO Solana wallet challenge in there, and you'll see why if you read the whole the post in there. But yeah, it's just about, once again, just get those 3 years in before you decide to quit, because 90% of traders quit before they figure it out. It's like quit. It's like quitting college before you get that degree, because you didn't get the degree in a year. Actually, versus for 3 years and all in SPX after that. So traders who are systematic traders from that test likely excel, once again, with that balanced pragmatism mindset, as they rely on, once again, systematic trading strategies and just systems in general, and objective analysis to make informed decisions without being swayed by emotions. So systematic traders don't care about stock trader 22470 on Webull comments saying that this stock is going to the moon. They don't care about all that stuff. They care about their system. They care about their plan, and they're going to follow that no matter what. And those kind of people are very much on the balanced pragmatism side, which is, the side of not wanting to be in the herd, or not trying to be too much of an optimist or a pessimist. And if that might be you, if that's you as a trader, then maybe that's a kind of mindset that you want to really lean into. And if not, that's okay. You don't have to try to have all these mindsets. You just got to figure out which ones work for you. And that's why we go over these different trader types, so you can see kind of which ones might work for you. Perfectionist trader types from the test are also pretty well suited to this mindset, the balanced approach mindset, as they prioritize precision and in their trading activities and approach each trade with a balanced perspective and very just careful consideration of potential risks and rewards. And those are the perfectionist traders. Once again, they're not concerned about being right or wrong or optimist or pessimist. They just want their trading to be, they just want to be perfect. And so, they don't care about what the crowd is saying. There's also measured caution mindset. And we're almost at the end here. Traders with this mindset exercise caution in their trading activities, taking calculated risks while prioritizing capital preservation. So if you're very high in risk management, this might be you, or might be something you want to strive to be like. These kind of traders are mindful of potential downside risks and implement risk management strategies, such as the protective strategies that Swinging Bull teaches in his coaching sessions to protect their investments. For the measured caution mindset, traders classified as conservative traders in that THARP test might excel here or thrive here as they prioritize capital preservation and risk management. Next up is analytical detachment mindset. So these traders approach trading with a high degree of analytical detachment. And Duco, or anyone who's been here, Stickman for a while, Nikki, anyone, Charlie, which coach do you think has? I know we just talked about the last mindset, the measured caution mindset, which is like Swinging Bull's passive protective options trading strategy. But which one of our coaches do you think has the analytical detachment mindset? These are people who are approaching trading with a high degree of analytical detachment. That means they rely on data-driven analysis, such as the charts, and systematic decision-making, rather than emotional reactions. Stickman, exactly. It is Jay, 1,000%. Even more so than I think Pookie's, to be honest with you, because Pookie's, I know, does fundamental analysis, and he does have a lot of other aspects as well. Jay is strictly analytical detachment. All he cares about is the technical analysis. So he remains objective and as unemotional as possible, because he doesn't even know what's going on he doesn't know when the earnings for the stock is. He doesn't know when the, this big news for the CEO is, or this, that, whatever, all these things, these news articles that come out and make people go get emotions, and then they make them press buy or sell in the market and make the stock go up and down because of emotions, not because of the charts and the levels that matter, and the fair value gaps and order imbalances and all that stuff that Jay talks about in his coaches session, as Duco knows. Because I know, Duco, you are a student of Jay. He doesn't care about all that stuff. He just cares about the analytics. He detaches himself from everything else except for the analytics, regardless of market fluctuations and outcomes. So it's strictly based on technical analysis. It's a great example of having analytical detachment mindset. So if you identify as an analytical trader, that THARP test, you're likely to resonate with this type of mindset and might be best suited for Jay's coaching session. Jay is a technical god, and he just knows what he likes to do. He does it really well. He doesn't overcomplicate it, And that's why he's so good with the crypto and the Forex and stuff, because crypto and Forex is, especially Forex, is very much based on the charts. There are some negative and detrimental mindsets, such as, and let us know, anyone here, be honest, if you ever feel this way. Impulsive greed is another mindset. So traders with this mindset succumb to impulses of greed, chasing after quick profits and taking excessive risks without proper analysis or consideration of consequences. They are easily swayed by FOMO, fear of missing out, and may engage in reckless trading behavior. I know I personally am very much someone who succumbs to impulsive greed mindsets. That's why in that $250 account challenge, I'd not only had that $250 account where I'm practicing good trading mindsets and long-term trading goals and all that positive stuff. I also opened a $50 YOLO account because I do succumb to impulsive greed. And rather than, because I'm going to, this is who I am, I have emotions. I'm a human, got a lot going on. It is what it is. I understand that, and I'm managing that. It's not about getting rid of your emotions as a trader. It's about learning how to manage them, identify them, and be able to still be successful in the market because we are humans. I realized that, and so I made a YOLO account, a $50 Solana meme coin. I got some dog with hat coin. I got some MOG for the culture. I'm degening out as doing whatever I want to do in that account because it's only $50, and in this scenario, that $50 I'm okay with losing. I wouldn't do this if I wasn't okay with losing that money. This is money I'm okay with losing, so that I can practice the good mindsets in the account that matters. Because I'm gonna have those emotions. I'm gonna want to YOLO and degen out every so often. So I let myself do that. You don't want to put yourself in a box. Let yourself do that, but do that with money that you can afford to lose. Just like going to to a bar after work. You think of your work and your job is your 250. Your main account. Then that beer is your YOLO account. You're having fun, like whatever. Obviously, you wouldn't go to the bar after work if you don't have money to do that. And so that's why you don't want to have YOLO accounts or do any of that kind of stuff if you don't have money that you can afford to lose. I wouldn't do this if there's money I needed, because that's not what a YOLO account is about. I love YOLO accounts. I love me some YOLO accounts. No, don't worry. We got a quick trivia, and it's going to be a big prize. And I want it to be a quick one I didn't want to go too long because the way that we're going to be doing this is going to be on the quicker side with a really big grand prize. So we have fearful paralysis. This is another mindset. These traders are paralyzed by fear and indecision. Let me know if this reminds me of you, anyone. These people hesitate to enter trades or exit losing positions due to fear of losses. Whether you don't want to enter because you're afraid you're going to lose because maybe the last 3, 4, 5 times you lost, or you don't want to exit for a loss because once again, you have that fear of losing, that loss aversion. They may miss out on profitable opportunities or hold on to losing trades for too long, hoping for a reversal. Is it 3 hoodies and a lifetime membership? Oh, I've done that too, not knowing what to do. Me, yes, of course. Yep. I've done that, myself, of course. After a big loss, that fearful paralysis kicks in. And sometimes it's best, when you're feeling that way, just to either take a break or maybe get a smaller account to trade with or whatever it may be, because you're feeling emotions, unless you can manage it and deal with it and then get it out of your system somehow and then continue trading. I've been getting a lot better with trading more emotionless. I love that, Duco. The only way to do that really is to be able to know what your emotions are, because you can't get rid of, you can't be emotionless. You can't manage those emotions if you don't know what they are. There's also overconfidence or overconfident hubris. Traders with this mindset exhibit overconfidence in their abilities and trading strategies, which leads them to take on more risk than they can handle. I know that's definitely been me in the past. They underestimate the markets and overestimate their own skills, leading to avoidable losses. Is very easy, especially when you have a coach like Lee or Jay or Bull or Ethan, Pookie, Austin, whatever, who are making a lot of money with their strategy. It's very easy to, learn their strategy, or, be part of their coaching session and get one good trade and, feel like you really got it, and then put a whole bunch of money in the next one. And turns out, the trade acts a little bit differently or something happens. And then, you could lose a lot of money that way, because that overconfidence, I know a lot of people who start off, they might have started off during a bull run. They got lucky and then they put a lot of money in the next trade and lost money because they just didn't know what they were doing. They just thought they knew what they were doing because of overconfidence. It happens a lot, and over allocating is usually the result. And not over allocating definitely helps a lot, Duco. Tick says that's me. Yeah, no, I've done that a million times. I've had, and this is part of my trading plan now. Is this is once again those 3 years is just a learning opportunity. Whenever I get like 3 to 5 good trades in a row, I need to just take a step back and just evaluate if I'm ready to trade, because there's a good chance I'm going to want to throw 3 times more than I should into the next trade. Is this how I am? Is who I am? And I could either not trade and quit, or I can just realize this is how I am, who I am, and keep track of my trades and realize, oh well, I have 3 wins in a row, 5 wins in a row. I'm feeling pretty good, and I'm feeling a certain way. My heart's racing. This whatever in this current trade I'm about to enter. Maybe I need to take a step back, or maybe I need to take a day off. Whatever it may be. 2020 was the best year ever. 2021 was the worst, and took it all back. Yeah. Next is reactive panic. So these traders are prone to panic reactions, and I know a lot of us probably have dealt with this as well, in response to unexpected market events or fluctuations, whether it may be earnings or for crypto, the halving or whatever it may be. No, I guess that's unexpected, but a whole bunch of different events and fluctuations that can happen in the stock and crypto market. They may react, and they being the stocks, or they being the people. These types of traders with this mindset may react impulsively to market volatility, selling off assets left and right at the slightest sign of trouble, or entering panic-induced trades. For example, you see a stock running and just jump in because of FOMO without proper analysis. I watched Ethan have banger after banger, then finally got to trade one. It was the first loss, and they averaged down 3 times. And yeah, that's the overconfidence. It's not just yourself. You can be overconfident in somebody else that you're following, such as one of us, whether it's Ethan or Puka, whatever, anyone, Jay Lee, it could be anybody. And it's important too, just because Ethan or Austin got 10 great trades, or just because Austin made $10,000 in last trade doesn't mean that you're going to want to over allocate and go against your plan and have that overconfidence mindset in your next trade or in the next trade that he makes that you're following. So Duca, that's a great point. Is it's not just in your own overconfidence, it's also overconfidence in others. So once again, reactive panic can lead to emotional decision making and irrational behavior, which usually leads to losses and takes away from long-term profits. All right, so last one, destructive perfectionism is another negative mindset. I don't know if anyone here is a perfectionist in life or just in general or in trading, but people with this mindset are plagued with perfectionism, which is perfectionist tendencies, constantly striving for flawless performance and becoming overly critical of their mistakes. They may dwell on past losses or miss opportunities, leading to self-doubt and negative self-talk. If you find yourself having that negative self-talk in the chats, maybe it's the time to assess yourself, your mindset, your emotions. Maybe take a day out, whatever it may be. These are just symptoms. We're just talking. This is this whole, 12 weeks, 15 weeks, whatever it's going to be about. It's just figuring out different symptoms that we personally have, in our trading that are negative. Just like when you go to the doctor, this is like a doctor's visit for your trading psychology. We're here to figure out what the different symptoms are. Because, when I go to the doctor, I don't know that my sore throat could be, XYZ disease I just don't know about, because I just don't know about it. And so if I was educated about it, I would know about that. And so that's what we're doing here. We're educating ourselves on what all the different diseases are in trading when it comes to our emotions, and figuring out, what the symptoms are as well. And then how we personally, which ones we personally exhibit and how we can fight those symptoms and fight those diseases overall. Destructive perceptionists may dwell on past losses or missed opportunities. Once again, they may struggle to move past setbacks and adapt their strategies. So just, because their strategy is, they're perfectionists, they might not be able to adapt to changing market conditions. And it might also just hinder their ability to learn and grow as a trader. So if you find yourself, if you find that's you, just learn to be easier on yourself. Whether that's making a point to reflect on your wins every day or just positive affirmations, that trading mind, or that trading, what is it? We have our mindset. We had that one channel, the psychology channel, and now I just forgot the name all of a sudden. Help me out here, somebody. Manifestation station. There it is. Bitcoin pump happening. Yeah, and here we go. That's the these pumps and stuff. That's the one of these things that leads to emotional trading as well. Hopefully that helps my Solana meme coins go up. So once again, if you find yourself having that perfectionism and that being a negative on your trading, just be easy on yourself. Reflect on your wins. Just be nice. Just be nice to yourself. Because if you're too hard on yourself, it might lead to quitting or just just negativeness in general. Let me just see what we have left here. Okay, we're almost done here, and then we have the perfect timing for the trivia. So now we went over some examples. So now we're going to be talking about how we as traders can develop a good trading mindset. And this, of course, requires self-awareness, commitment, and deliberate practice. So first up, is mindfulness and emotional regulation. So just start by practicing mindfulness techniques to enhance self-awareness and emotional regulation while trading. So take time to observe your thoughts, emotions, and physical sensations without judgment. Don't judge yourself for them. By physical sensations, it's your heart racing or just panic setting in. When you notice negative emotions arising, such as fear or greed, take a moment to pause and breathe deeply. Realize, why it might be happening, what your symptoms might be. And by cultivating mindfulness, you can become more adept to recognizing and managing emotional triggers and patterns that can lead to impulsive or irrational decisions. So basically, this is just being aware of your emotions so that you can react to them in a productive manner as opposed to not being aware of them at all and unknowingly let them affect your trades. You might think that you're just not a good trader, your strategy's not good, but it's actually the psychology that's where you're struggling. Next is continuous learning and improvement. So all of you are already doing this. Adopt a growth mindset and embrace learning as an ongoing process in your trading. Stay curious and open-minded, seeking out new knowledge and insights from a variety of sources. That's a key, variety of sources. That's why we don't have just one guru teaching you one way. Surround yourself with mentors, coaches, or peers, especially peers, who can provide valuable feedback and guidance. By actively working on improving your trading skills and knowledge, you can stay ahead of the curve. So I know a lot of people are in this alone. You'll be surprised how many people don't do this with other groups and stuff. And you'll be able to hopefully adapt to changing market conditions more effectively. And once again, each and every one of you are already making huge steps in this regard, just by being here tonight, taking the free classes, going to the coaching sessions. Next up is visualization and mental rehearsal. We can take advantage of the power of visualization techniques to reinforce positive trading behaviors and outcomes. And a lot of people don't think about this, but maybe sometimes just spend time visualizing yourself executing your trading plan with discipline. Just like, for those of you who've done sports before, how you might visualize yourself swinging at a ball a certain way, when you're in the on bat circle or whatever it may be, when you're doing sports, typically you might visualize yourself doing something before doing it. That can help you, execute your trading plan with discipline, confidence, and precision, as opposed to just going in there blindly. So just imagine entering trades with clarity, conviction, managing risk effectively, and sticking to your predetermined exit strategies prior to actually even getting into the trade. Visualize yourself overcoming challenges and setbacks with resilience and determination, and just trading psychology skills. And just by mentally rehearsing successful trading scenarios, you can hopefully condition your mind for success and increase your confidence in your abilities as a trader. I know it sounds silly to some people, like the whole, if I just, visualize it, it's going to, might happen, but you'll be surprised, how important just mindsets in general are. And, these little techniques, these little things could have, for certain people, a big effect. And for some, it might not do anything. And we can do this with past trades as well. Just kind of visualizing what we could have done differently for next time. So lastly, we're going to really just quickly talk about goals and expectations as traders. Once again, setting realistic goals and expectations is a crucial, huge aspect of developing a successful trading mindset. So step one is to define your objectives. So start by clarifying your trading objectives. Just figure out what your trading objectives are, whether it's achieving a certain level of profitability, a certain trading portfolio goal, building a consistent track record. So just consistency, your portfolio just consistently goes up, as opposed to up and down, up and down, up and down, or even just mastering a specific trading strategy in the coaches program. Next, break down your goals. So break down your long-term goals into smaller, more achievable milestones. This allows you to track your progress more effectively and kind of just stay motivated along the way by achieving them, as opposed to just waiting forever to achieve those long-term ones. Whether it's, my goal is to learn Lee's strategy. Well, my short-term goal can be to attend 3 classes or to take the 4 classes that are already up there, whatever it may be. Then you focus on the process, which is not the outcome, the process. Instead of fixating solely on profit targets, or you want to focus on the process of becoming a better trader. So it's not just about this target, this target, this target, this profit, this profit, this profit, this profit. I need to eat an elephant one bite at a time. Exactly. Slow and steady. Emphasize aspects such as risk management, discipline, and consistency, knowing that profits will follow. This is important. Knowing that profits, once again, that's discipline, risk management, consistency, knowing that profits will follow as a byproduct of good trading habits, not the other way around. You don't just get profits and then all of a sudden, you learn discipline and risk management because you need to learn those things first, and then the profits will come. And a lot of that is trial and error and just time in the market. So be flexible and adaptive. This means being flexible and adaptive in your goals and expectations. So recognize that the markets are changing all the time. Your goal in one market might be different the next month when a big overturn happens. So adjust your goals and strategies and as needed based on these changing market conditions. Some other things to do just to cultivate patience and persistence in trading is to just start developing long-term perspective. That means to adopt long-term perspective in your trading approach, which is like understanding that success in trading is a marathon, not a sprint, which Chikak just, very, very much just talked about right here in the chat. So just cultivate patience by focusing on gradual, sustainable progress rather than seeking quick wins, unless you're in your YOLO account, of course. Stay committed to your plan, so remain committed to your trading plan and strategy, even during periods of drawdowns. So trust the process and stay disciplined in executing your plan consistently, knowing that consistency breeds success over time. I know people just want to make money quickly and they don't want to, they want the success over time. They want it quickly and they want it now. And you need to get consistent in order to do that. You just got to do things over and over and over again. Being able to do this while also being aware of market conditions and when it is appropriate to adjust a strategy because of them is key. Also, learning from setbacks is super important. You have to embrace setbacks and losses as learning opportunities. Nikki says, I used to like to change my plan every other day too. Yeah. Yeah, it's very easy to do that, when you get one bad day or two bad days. So learning from setbacks, instead of dwelling on past mistakes, analyze them objectively. Don't be hard on yourself. Don't do it while you're feeling emotional. Maybe wait a day or 2 days. Analyze them when you're feeling objective and identify areas for improvement and use them to refine your approach and become a better trader. A lot of people look at their losses that day or the right after the loss and they put their notes in and they're hard on themselves and it makes them even more emotional. You can take a day, if you want to be more objective about it. It might actually be beneficial in the long run. Also, just learn to celebrate small wins and achievements along the way to maintain motivation and momentum. Once again, your psychology, your emotions is so important, and your environment, and your emotional environment is very important too. So celebrate those small wins, acknowledge your progress and successes, no matter how small they are, and just use them as fuel to keep pushing forward. So developing a disciplined trading mindset, setting realistic goals and expectations, and just cultivating patience and persistence are all essential when it comes to successful trading. So hopefully, together we can all learn to figure out, what our symptoms are, what are the emotions that we struggle with, that help us, and the positive mindsets we have, the negative ones we have, whether it's just by talking to each other, journaling, and maybe, or just even sharing, you can use that manifestation station to create your own thread and just journal your trades in there, so everyone can see them. We can discuss them if you want. Just the same way that I do in the $250 account challenge, y'all can do in that manifestation station. Just get feedback, this, that, whatever. It's a great way to learn, to grow, and to use your peers to your advantage. So I'm going to go ahead and end the trading psychology stream on our StreamYard. Thank y'all for watching. For those of you who are watching after the fact, we do this every Wednesday, 5 p.m. Eastern. I hope to see you there next time. But until then, I hope that you all make some bread.